Plenty of trouble for the IPO market. 70% of last year's IPOs now trading below their opening price. So what does this mean for the tech sector and private companies going forward? John Malloy is partner and co-founder of Blue Run Ventures, as well as the first venture investor in PayPal. John, it's not every day this topic gets the front page treatment at the Wall Street Journal. Why do you think we should be focusing on what the IPO market is telling us about the market more broadly?
Well, I think it's another cycle. You know, we're obviously in a new news cycle, and it's a negative news cycle, and so it makes sense they would put it on the front page.
So what does this mean for companies who are trying to issue more stock because they went public and they have very small float, for private companies that are considering a public offering at some time? Is the market just completely chilled, or are there still discussions going on behind the scenes?
Well, I'm an early stage investor, so I always have to take a long-term view. So I don't really get focused on the short-term market ups and downs, in this case a down. Clearly, access to capital could be an issue for those companies that are thinly capitalized and are public. But really, I think the standards for going public have been reasonably upheld over the last 4 or 5 years. So I think there's ample cash in most of those companies.
John, tell us about the environment in Silicon Valley right now, from commercial real estate to the mindset of early stage investors, the sort of valuations that they expect and demand. How much of a shift do you see taking place over the past few weeks and months as the market has shifted?
So that's what's really interesting or different about this place, is that actually it's the best environment to invest in when the froth comes out of the market, and you actually hit on it. One of our bigger limiters is actually real estate. It starts to cost a lot of money to start a company here, too much. Now you start to see things get more reasonable. So, to start a company, it's a lot easier. It's also a lot easier to recruit. In the past, when you're in a more heady market, it's very difficult to keep people and recruit new people, particularly when you're competing with a Facebook or a Google. But now suddenly, even people working at Google are looking around and thinking, maybe my prospects are better off joining with a new great company. So ironically, in this kind of environment, it's actually the best time to start companies, and some of my best companies were actually started in troughs.
Interesting, because the big companies would argue it's a good time for them. It's all the people at the companies that are facing Series A, where, your equity comp is very questionable now. Maybe it's better to go to a larger, safer firm with more liquidity. Why is that wrong?
If you are somebody who's worried about safety, I don't think you should go into a startup. I think if you're looking to make a difference, if you're looking to see, to have an impact, but also have an impact on your own balance over time, I think you're willing to take that risk. And that's actually the point. The people who should take the risk don't go away in the Valley. The people who shouldn't take the risk do go away. So those people who are, timid or risk adverse, or they have, for whatever reason, and they would normally avert to a bigger company, I encourage them to go there. But, when you look, I was with PayPal or Waze, all those companies were started in difficult times. And that's when you really find the sort of hard-bitten, extremely smart, driven people.
Well, we got to a point, John, not even a year ago, where engineers were hiring agents to find them jobs, and companies were signing 10-year leases because they were worried that they wouldn't be able to find corporate real estate. Are you seeing froth across the board settle out, or do you think that there are still some pockets where there should be correction and some behaviors should be corrected?
I try to keep it real. I don't really get caught up in the buzz cycle of things. I haven't seen that many egregious things. I will say to you that real estate is a lot more reasonable, and that is a big limiter in the Valley, just because we're a small place. Also, salaries have come down. It's definitely easier to recruit people today. It's much easier to build a company today.
Well, perhaps that is a good sign, at least for now, and for those who are trying to hire. John, we appreciate your time this morning.
Thanks for having me.